Hey, welcome back. Today we are bringing you a deep dive exploring how new financial regulations and global geopolitical shocks are forcing the Korean market to shift from short-term speculation to long-term stability. Let's get right into it.
Yeah, it is. It's definitely a transition period for investors right now.
Yeah.
The underlying mechanics of the market are changing on multiple fronts, and that really starts at the institutional level.
Okay, let's unpack this. There is a push right now to allow cornerstone investors in IPOs, right? A bill for this is expected to be tabled at the National Policy Committee on March 31st.
Right, exactly.
I mean, think of it like requiring a VIP guest list that prevents a party from getting completely out of control. It just establishes a firm baseline, preventing the crowd from rushing the doors on opening day.
Yeah, that is a great analogy.
Mm.
To understand the why there, we have to look at how these institutions operate. They pre-commit to buy shares, but with a strict 6-month lockup period.
So they can't just sell right away.
Yeah, exactly. By removing those shares from the tradable pool, it reduces that initial volatility. And if we connect this to the Financial Services Commission's new rule, well, a clear pattern of forced stability emerges.
Right. The FSC is now requiring all listed companies to disclose their Treasury shareholdings and their disposal plans.
Yes. And the notice period for that runs until May 11th.
Let's clarify that for folks listening. Treasury shares are essentially a company's own stock that it has bought back and hoarded. Sometimes companies suddenly dump these shares to raise capital, which dilutes the value for everyday investors.
Right. It can be a real issue.
So I have to ask, are these disclosures enough to genuinely stop companies from using Treasury shares just for short-term price manipulation?
Well, merely announcing a disposal plan doesn't physically prevent a company from selling. However, structural transparency forces the market to price in that risk beforehand.
Makes sense.
Yeah, so if the market is being pushed toward careful long-term decisions, retail investors must scrutinize the actual costs of their trades. According to financial supervisory service data provided by Representative Lee Kang-il, between December and February, the top 10 brokers handled 439.3866 trillion won in overseas stock trades.
Here's where it gets really interesting. We need to look at the massive discrepancy in fees for that volume.
Right, they are definitely not uniform.
I mean, Merit Securities led the volume with 100.933 trillion won, but they made only 2.11 billion won in fees. That is a 0.002% rate. Meanwhile, Korea Investment and Securities handled 14.5704 trillion won, but took 41.66 billion won in fees. That's a 0.286% rate.
What's fascinating here is the underlying cause of that gap. Financial authorities recently halted overseas stock marketing discounts.
Wow, okay.
Yeah, so without promotional events masking the true cost, we are seeing a 143-fold difference in base rates. It means investors must be extremely cautious about where they trade.
That is a stark contrast. So what does this all mean when we apply these costs and regulations to the current extreme market volatility?
Let's analyze the U.S.-Iran conflict's one-month impact, specifically from February 27th to March 30th, using ETF check data. The market divergence was very notable.
Right, we saw some pretty significant drops.
We did. The Tiger Hyundai Motor Group Plus ETF plunged 24.55%, driven by export fears and high exchange rates. And the Rise 5 major group fell 19.68%.
But the PLS US Hanwha group dropped only 8.7%.
Right, and that narrower drop comes down to being buffered by its defense sector weight.
Because those defense contracts act as a buffer against sudden consumer market panics. It makes you consider a broader point, With new funds like Worry Asset Management's One Doosan Group Focus launching on March 31st to target power tech and AI, you have to wonder.
Wonder what exactly?
Is the current tech sell-off a fundamental shift or just temporary panic?
Which brings up a final provocative thought for you to consider. As regulators try to build guardrails for long-term investing, will these rules actually protect you from global shocks or just restrict your agility when crises hit?
That's all for today's deep dive. We'll be back with more insights. You've been listening to the Korea Economy Brief, straight from the front page of Seoul Economic Daily. Thanks for tuning in.